292 flights, and Air India will also be operating on 20 of Air India Express's routes to help them, to support them in this time. Now, what is also important to note here, that in the statement they have also said that while we continue to engage with our cabin crew colleagues with a commitment to address any concerns, we are taking appropriate steps against certain individuals as their actions have caused grave inconvenience to thousands of our guests. Now, this certainly, this certainly hinting at the dramatic developments that we saw today, how in fact all those employees, that had taken this mass sick leave that impacted the operations, some of them already have been sent termination letters. Now, what the number that we are getting to know at this point of time is 30 employees of the Air India Express have been sacked, and in that termination letter it has been written that because they did not turn up for their duties, this goes against their employee code here. Now, shortly after that, an ultimatum had also been issued to all of these employees to join back their work by 4 p.m. today itself. Otherwise, the management can take action. Now, in fact, remember that today a town hall meeting is also pre-scheduled where we are expecting that these employees of the Air India Express will be raising their concerns, the same concerns that they had raised before the chairman of the Air India Limited, where they had said that they are not being treated equally, and even after clearing their interviews, they are being offered a lower position jobs, and also regarding the changes in their salary structure. Now, what will be more important here to see as to what will be the management's take on this, what will be their decision, their solution to this crisis, because remember, the pressure on them continues to increase, with the regional labour commissioner officer also now coming in support of the employees and saying that mismanagement and blatant violations of the labour laws were apparent, and a high-level committee should be formed to address the grievances of these employees. And also remember that the Ministry of Civil Aviation had also sought a report from the Air India Express and had asked them to resolve this issue as soon as possible, because it is certainly the passengers who are being very much impacted because of this. So certainly it will be crucial to note as to what will be the conclusion of this very important town hall meeting that is scheduled for today. Now, in Delhi with camera person Kanan Patra, this is Ishka Verma for NDTV Profit.
We'll continue to bring the latest on that as the scenario evolves. But moving back to some of the market's action, we're joined by my colleague Anushi and Kamal Singhal, who's the MD and CEO of Arvind Smart Spaces. Mr. Singhal, thank you so much for taking time out for us today.
Thank you. Good afternoon.
So, Mr. Singhal, Anushi joining from the other side over here. You had a strong end to the fiscal 24, about 38% growth in pre-sales and strong collections. How are we looking forward to in FY25 in terms of growth?
Yeah, Anushi, you're right. We've seen a great year, great quarter. Almost on all parameters, the growth has been very healthy. As you said, we crossed for the first time 1,000 crore sales and fresh looking milestone, which was 38% up, as you said. In fact, even cash flows were very healthy at 456 crores, which almost doubled as compared to what the number was last year. Now, I mean, we've been seeing that real estate has been going through a great cycle. It definitely looks like a cycle which is sustainable and which is very, very widespread. Possibly we are somewhere in the middle of this cycle, and we see that this growth momentum in general, and in particular for us, it should continue for next 2-3 more years. And we have been kind of recording growth to the extent of 30 to 40% in most of our parameters in the last few years, and we hope that the same trend should continue in the year which is coming in.
Strong 30 to 40% of growth over here. Now I want to move on to your business development side, 5,000 crore of a projection over here. But if you look at last year, compare it that 4x of a jump compared to last year. Now, is this more on the conservative side if you're looking at?
Yeah, you're right. I mean, in fact, post-COVID, we suddenly opened the investment gates, and we had to catch up with what we could not do during COVID. So a couple of years back, it was around 1,000 crores, little less than 1,000 crores that we added in terms of new projects. And last year, we added in excess of 4,000 crores. As we said, 30-40% growth is what we look at in most parameters. And in this case as well, if you were to grow 30%, that means we should be easily be able to cross 5,000 crores. And that's what the target is. But, end of the day, last year was a catch up. And this year should be a steady state, 30% or thereabout of growth in these kind of parameters that we are expecting from here onwards.
Absolutely. And if you can just on this, how many projects are we planning to add over here in the course of FY25? Last year, we had about 4. And again, the key focus regions that we are looking at.
Yeah, so last year, as you said, 4 projects added. This year, it should be almost like double, 7 to 8 projects in that region. We are strongly present in the market of Ahmedabad, Gandhinagar, and Bangalore already. This year, clearly, the focus is to add and consolidate more on Mumbai and Pune. So the focus will be to add a couple of projects in this new market, Mumbai and Pune put together. And of course, we'll consolidate further in Bangalore and Ahmedabad.
Well, thank you so much for joining in and sharing your outlook on next year. Again, thank you. And now, Pallavi, you can take over.
Thank you so much for that, Anushi. But moving on, Zomato, Domino's, KFC, Burger King and Barbecue Nation. The list will go on till my stomach starts rumbling with hunger. But why are we talking about this? The reason is the QSR industry that has observed a large underperformance in FY24. But what's led to the underperformance and is recovery in sight? My colleague Mihika Barve has some interesting data. Mihika?
Yes. So now the Indian quick service industry has been in focus for a while, and the sector has seen underperformance in FY24. Now, after a robust run from FY22 to H1 of FY23, revenue growth in terms of and net profit growth of brands have moderated from the second half of FY23. Now, the slowdown has been longer than expected, and that's what Kotak Securities has seen. And the Q3 also saw the same trend of weakness. Now, when we talk about the reasons for underperformance, one is subdued demand. Now, subdued demand, lower demand, and many companies have cited this due to elevated inflation. Q3 also saw weaker results despite a moderation in inflation, and the dine-in footfall remained lower, and management commentary stated that the demand dipped further post-Diwali. The second reason is the growth of the food delivery apps to the likes of Zomato and Swiggy, who have expanded their presence over the past years. For example, Zomato's average monthly active restaurant delivery partners has grown significantly. Now, if you look at the graphics in FY19, this stood at only 61,000, while we did see a dip in FY21 due to COVID year. The growth has been substantial throughout the years, and in 9 months FY24, this value stood at 2,54,000. Now, according to BNP Paribas, this hurts QSR sales and dampens them, because what happens is when they're partnering with all these different restaurants, it gives customers more options and it leads to sales fragmentation. When you look at the market share of these companies too, one can see a change in the market capitalization since the first quarter of FY21, FY23 itself. Now, for example, Jubilant Foodworks has seen the largest fall in market share of 200 basis points, where this is also followed, and the trend is seen in Westlife Foodware and restaurants and Barbecue Nation, who have lost 50 to 80 points. However, there are companies who've gained market share like Devyani International, who's gained 150 basis points of market share. But now the question lies, is there hope for recovery? Now, according to Kotak, you can't exactly predict the time that the recovery will happen. That's challenging, but they anticipate the down cycle to return to recovery soon, and it expects recovery from the second half of FY25, which we're currently in. Further along, management commentary has also shown a positive long-term outlook, with most companies not cutting their store opening guidance, and this comes despite the weaker demand scenario. Now, what they believe is that the slowdown is cyclical, and it's mirroring the impact of mass discretionary consumption. Nuvama also noted that there's been a moderation in store additions. Now, the last 2 years, all of these companies have been adding stores on a year-on-year basis, and what this does is it impacts the margins, okay? But Nuvama knows that there have been signs of moderation, and the QSRs could benefit from the demand normalization at the low end. And lastly, these companies, in terms of their stock price, they're off their life highs, which Nuvama notes as a very attractive entry point. For example, Barbecue Nation and Restaurants Brand Asia are down 74% and 52% respectively from their life highs.
Thanks a lot for that, Meka. And with that, it's time to slip into a short break. But do stay tuned. On the other side, we bring to you election coverage from the heart of Kashmir, Srinagar. We'll be right back.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insight.
Welcome back. You're watching Market IQ on NDTV Profit. Now moving on to NDTV's special election coverage. Srinagar will see the battle between two young politicians from the National Conference and the PDP. Nazir Masoodi brings a ground report.
Election fever at Srinagar's iconic Lal Chowk, once an epicenter of separatist politics and a perpetual security hazard.
This is the first election in Kashmir in last over 3 decades, which is being fought without fear of violence or boycott calls by separatists. This election is not just about who wins or who loses. It is reviving politics that was in a state of suspended animation, as Jammu and Kashmir is without an elected government for last 6 years.
The battle for Srinagar constituency is mainly between two young politicians, Agha Ruhullah Mehndi of National Conference and Wahidur Rahman Para of PDP. One is a victim of terrorism and the other was jailed on terror charges. Para was key player in BJP-PDP government's youth outreach program in Kashmir, but after scrapping off Article 370 in August 2019, he was booked under stringent anti-terror law UAPA now out on bail.
You would get praise from the none other than the Home Minister of India for organizing major youth rallies at a time when things were horribly wrong in 2017, 16 and 18. But then you are the same person who is a terror accused, who is facing UAPA charges. How you would define yourself, a man who is being praised by the Home Minister for involving youth in the mainstream, or a terror accused?
I think this is story of every Kashmiri, every young Kashmiri who wants to express himself democratically. There are structural issues we face. Even the Home Minister of India or the Chief, I was working directly with the Chief Minister Mahabubaji closely. So irrespective of, we had so much of, like the Home Minister would openly say, will praise my work. But then you saw how I was treated. I was booked in 2 terror cases by NIA, by SIA, then, tortured, humiliated and kept in detention for like 2 years. I think this is what's happening to every Kashmiri, and this has historically happened to us. My message to people of India is that Kashmiris are like you. We are not born terrorists or stone pelters or militants.
National Conference candidate Agha Ruhullah's father, Agha Sayyid Mehdi, an influential Shia cleric, was killed in a deadly IED blast by terrorists in 2000. Agha's consistent stand on key issues and staunch opposition to revocation of Article 370 has won him praise even from political opponents, including main rival PDP. Despite being a victim of terrorism, he publicly apologizes for failing to stop migration of Kashmiri Pandits in 1990.
In your repeated, speeches, what you are talking about August 5, 2019 was a black day, and you don't accept, and people don't accept that decision. So you are saying that you will going to represent that voice in the parliament. Is it still a relevant issue for the people?
It is. You can see from the response of the people and the sentimental outbursts when you talk about it. You can see it in their tears and eyes. People have not forgotten how we were treated and how our dignity and rights were snatched from us, and that too undemocratically, without our asking for our consent and wish and will. So that was a humiliation for us as a nation. So it remains with us. It is relevant. It is relevant until we get our rights and dignity back.
Okay, so is Article 370 scrapping the central issue of your election campaigning?
It's not only the central issue, it's the driving force for my campaigning.
The Srinagar Lok Sabha seat is spread across 5 districts, from the Zojila Pass that separates the valley from Ladakh, and right up Peer Ki Gali or Peer Panjal Mountains in South Kashmir. In Pulwama, which is part of Srinagar seat, it will be the first vote for these enthusiastic residents. In previous elections, they had boycotted polls.
पिछली इलेक्शन में आप लोगों ने वोट डाला था या बाइकआउट?
हमने नहीं डाला। हमने बाइकआउट किया था उस वक्त, नहीं डाला था। वही साहब जैसे लीडर है, वही साहब के लिए हम इसकी जाने सबको वही साहब को वोट डालेंगे, इनसे बाइकआउट किया था।
If participation of people in election campaigning translates into votes, Srinagar constituency is expected to defeat boycott politics before electing its new MP. There are clear signs on the ground, and it appears people are leaving behind Srinagar's boycott legacy. In Srinagar, Nazir Masoodi for NDTV.
And with that, it's a wrap. This election season, stay hydrated, do vote, and stay tuned to NDTV Profit.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve?
Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit. Let's first address the latest numbers that have come through from the Association of Mutual Funds in India. The AMFI has released the latest inflow numbers for the month of April. And the total inflows into mutual funds in the period of April has stood at 2.39 lakh crore rupees, and that is a substantial improvement. What you're seeing on the screen is net equity inflows, but the whole number is 2.39 lakh crore rupees there, and it's a significant improvement from the previous month where you saw a significant outflow, and that was largely on account of an outflow in liquid funds. Now let's look at the equity number, because this is also quite significant. 18,917 crore rupees or thereabouts of inflows into actively managed equity mutual fund schemes. You have an inflow of about 18,917 crore rupees of inflows into equity mutual fund schemes, and in that you have an inflow of about 2,200 crore rupees into small cap mutual fund schemes, as well as 1,793 crore rupees of inflows into mid cap mutual fund schemes, which is quite strong. Large cap schemes have seen an inflow of about 350 crore rupees, and multi cap schemes as much as 2,700 crore rupees. Overall, the fixed income space has also seen inflows, and that has seen inflows of about 1.9 lakh crore rupees. This is strong at the start of a new financial year as well. Now, hybrid schemes have seen a substantial inflow as well. That's a number I mistakenly spoke about, 19,862 crore rupees. A bulk of this coming through in the form of arbitrage funds, and perhaps to a certain extent this is because there is a larger interest from the retail segment into arbitrage funds ever since there was a change in the taxation treatment in the fixed income category. This is now being preferred as a short-term category to invest in. Now, a few aspects to pay attention to. First of all, the SIP number looks very strong. The month of April saw SIP inflows of as much as 20,371 crore rupees on a gross basis, and this is an all-time high. The other aspect to focus on is the KYC situation. Now, it was anticipated that this would cause a bit of a problem for the industry as a whole, because a lot of people have reported problems with transacting in mutual fund schemes. If you're unaware of this, what has happened is from the 1st of April, the norms have changed where depending on the documents that you've used for KYC, you will fall into one of three categories. The first is validated, in which case there's no issue and you can transact as you normally do. The second is registered, in which case there is a requirement for an Aadhaar validation, and in that situation you can continue to transact in the folios that you currently invest in, but no new folios can be invested in. And the third is on hold, in which case you cannot transact. Now, AMFI has actually clarified that as many as 93% of investors fall in the validated or registered category, which means that they can continue to transact. 3% fall in the on hold category, and 4% are those with no KYC. And this is actually something that is borne out in a conversation that I had earlier in the day with the head of a mutual fund, where he said that 97 to 98% of transactions in the space are continuing to go through. Now, that's more or less what the numbers look like in the month gone by, and it looks like a pretty picture. And with that, let me introduce you to what the show is all about. And this is in fact a conversation that my colleague Tamanna Inamdar had, and it's quite an interesting one. They spoke about loan against mutual funds with Raghavendra Nath, who is the managing director of Ladder Up Wealth, and Santosh Joseph, who is the founder of Germinate Investor Services. Listen in.
Even as mutual fund investments keep increasing in sheer number and volume, and also become a core part of an average Indian's financial asset and their financial armory, loans against mutual funds are also gaining prominence. Today we're going to talk about what these are, how do you get them, and is this a good option if you're looking for short-term funding? Now, to speak on some of these factors, I'm joined today by Santosh Joseph, who's founder of Germinate Investor Services, and Raghavendra Nath, who's MD of Ladder Up Wealth Management Private Limited. Welcome to both of you, Santosh and Raghavendra. Great to have you on the show. Santosh, let me begin with you and just give us a bit of backdrop and background on loans against mutual funds. Have they become more popular? How are they used? And why are more and more people going for it?
Tamanna, it's interesting that many of our mutual fund investors don't even know that you have a facility called loan against mutual funds. So therefore, I think this show is going to do a great service for our viewers when they get to know that there is a product like this. That is, you could avail of a loan against your mutual fund. In the past, you must have heard about loan against an FD or loan against assets, but here's loan against mutual fund. Now, interestingly, this product has been there for over 20 years, but many people were not aware of it, and many people didn't know that this was possible. Now, thanks to the growth of the Indian mutual fund industry and the extreme popularity of the mutual fund as an investment vehicle, now even the loan against mutual fund is also growing in awareness, which means that when you have a mutual fund unit or units or a portfolio, and there is a need for you for funds, either for an emergency or for a short-term gap, you don't have to sell these units, but these units are actually pledgeable, can be used as a collateral, borrowed against, repaid back at great convenience. So therefore, the loan against mutual fund is an extremely convenient tool for mutual fund investors to use their investments without disturbing the portfolio, without compromising on selling of the funds to meet short-term or liquidity requirements, and make money work for you while also have the luxury of liquidity at relatively lower cost to the existing loans available. I hope that's a summary of the product.
No, it's a great summary. Raghavendra, let me get you in on why these have, they've been around for a while as a product. Why have they become popular now? And secondly, how does this compare, for example, if you have a quick need of money, to a loan against FD, that question to Raghavendra, or even a personal loan?
Yeah. As Santosh was saying, in any case, this has been around for a very long period of time, and people are now getting more and more aware, and it can be used against any liquidity crunch that individual investors may have. However, the process of taking a loan against mutual fund versus, let's say, you set a loan against FD or let's say a personal loan, is a little more cumbersome process because it requires, let's say somebody has 5 mutual funds and you're taking loan against these 5 funds, then you need to basically go and mark lien against these fund units, And when the loan has been repaid back, then you need to take the NOC from the bank or the NBFC and again go to the mutual funds to unlien these. And during this period of time, you actually lose all liquidity. So if you were to basically wanting to switch from one fund to another, you will not be able to do that when this loan is current, or even a small portion of the loan is current, because those units are already liened or pledged in favor of the bank or the NBFC. So the process is a little cumbersome, and therefore it is suitable more when you have a large need of funds for a longer duration. When you have a small illiquidity or let's say a mismatch in your finances for 1 or 2 months and a small amount, then probably a personal loan or a loan against FD could be better because they are far easier to seek.
Seems like there are quite a few disadvantages as well, and perhaps which is why loan against mutual fund is not that popular. Santosh, if I were to ask you to compare to other options when it comes to a loan against mutual fund versus loan against FD, personal loan, etc., how would you rate that?
Yes, see, there is a reason why they are not popular is because of the way the product is loan is applicable. For example, thanks to the great amount of technology today that's available in credit cards or loans or those quick easy loans today, a personal loan is dispersed in a few minutes if you got a good credit score and you got access to those apps on the banking platforms or the NBFC platforms. Whereas a little bit of a difference in the loan against mutual funds is that you got to mark a lien against the unit, and therefore a longish portfolio will take that many more number of liens to be marked. So therefore it easily, on a comparable time basis, one can be done in a few minutes, other one will take at least 2 to 3 business days. Now, on the other hand, when you look at in the mutual fund space also, there is limits that apply. Whereas in a personal loan, if you are looking for a certain particular amount, it's very easy and you just get it. Whereas in mutual funds, different category has got different limits. For example, liquid and fixed income has got a certain percentage margin, equity's got a different percentage margin, and there may be some schemes that you may or may not get even a loan against. So there are these subtle differences, and I think I agree that if this is going to be for short term, then credit cards or personal loans will make a big difference, where if it's going to be for slightly long term, more strategic in nature, that you have investments, you don't want to disturb it, you want to raise liquidity against your investments without disturbing your investment, then loan against mutual funds become handy. So essentially, it's for a client to manage his cash flows well and bucket it exactly for the cash flow that he needs for.
I also want to understand, let me bring this to Santosh, in terms of interest rates, how does it compare? In what situation should you even look at a loan against mutual funds? And the concern of, what Raghavendra also said, that even if you take a loan for a small portion, that entire investment gets sort of locked up. You can't do anything with it then. Also, what happens if the value, just to add to that, what happens if the value of the underlying units fluctuates a fair bit? Because at the end of the day, they're, mutual fund investments.
Yeah, so there are 2-3 parts to this. Number one is the category. If you're in fixed income, you get a higher margin, but please remember the interest rate variable becomes very critical because you know what returns fixed income can give and what interest you're borrowing at. So to be honest, it really doesn't make much of a difference if you're having fixed income and you want to take a loan against it, because there's a very little fine gap between the interests that you pay and the returns that you get depending on the category of fixed income. Now, some people don't want to break the investment, they don't mind the cost of interest, then it maybe justifies. Now, coming to equity, considering equities are a volatile asset class, the margins are limited. You get maybe at best 55-60% margin on equity funds. And there again, if there's a sharp sudden fall, there will be a margin call. They will ask you to fund the difference in the gap between the fall in the mutual fund value versus the amount you borrowed. Now that apart, the cost of interest that you pay on the loan against mutual funds at sometimes are attractive and lower than what you traditionally pay for personal loans. So is there a clear advantage there? The answer is yes. The second biggest advantage, notwithstanding the cost, is also the utilization. Now, in a personal loan, whether you use little money or more money, once the loan is dispersed, you pay interest on the overall amount. Whereas in loan against mutual funds, by and large, it is an overdraft kind of a product. You pay only on utilization and you pay less based on your repayment. For example, you borrowed 5 lakhs, you paid 2 lakhs, you only have a differential of 3 lakhs, you pay interest only on the outstanding loan amount. So there is a little bit of convenience in the loan against mutual funds in terms of how you're charged in interest and how when you pay back, there's no penalty to pay back and you only pay for the residual amount. Whereas the interest rate itself can be a little softer than the traditional personal loans.
And just that question to you as well, Raghavendra, is the big problem, apart from the fact that your investment gets stuck while your loan is on, the variance in the value of the units?
Yeah. No, that's right. I think, but generally, when you are looking at when an NBFC is disbursing the loan, they are mindful. And that's why, as Santosh said, that let's say typically, and I've seen that for many clients of ours, whenever we have taken a loan against equity mutual funds, NBFCs don't extend beyond 50%. And I think 50% is good enough for them to cover for any volatility which will happen in the next few months or whatever. So unless there is an extreme event like a global financial crisis, the margin calls may not happen because NBFCs in any case are very mindful of the risks that they are taking. Okay, so that is not such a big concern. I think where investors can benefit a lot is the lower interest rate, because you can actually negotiate interest rate in loan against mutual funds, because you see it's a secured product. The NBFC can sell your units at any time and recover the money if you don't pay them in time. Okay, so it's a secured product, and because the liquidity of mutual funds is very high, an NBFC will prefer a pledge of units against, let's say, a pledge of a car or a pledge of a house, because selling them is far more difficult than selling a unit. So the rate of interest can be negotiated depending on the quantum and the amount of margin that you are ready to give up. So let's say if you have 50 lakh rupees worth of units and you only want 10 lakh rupees of loan, NBFC will be able to give you a very, very fine interest.
Absolutely. So those are the factors you need to consider when going in for a loan against mutual fund. There are some pros, there are some cons as well. We'll take a very short break, but Santosh and Raghavendra, stay with us, because on the other side, we answer your queries. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Hi, thanks so much for joining in. Let's focus in on earnings because there's a lot that is happening as we speak. At the bottom of your screen, you see State Bank of India. The net profit number is quite substantial, 20,000 plus crore rupees, and that is a significant beat on the consensus estimates. That is reflective in the stock price as well. On the screen, it's up as much as 2.2%, nearly 20,700 crore rupees of a profit that has been announced by State Bank of India. I'm looking at the numbers as we speak right now, and the NPA numbers in front of me. You have gross NPAs that have come in at 2.24%. This is an improvement on a sequential basis. It is an improvement from 2.42% in the comparable quarter. I'm talking about a sequential comparison. Net NPAs for the quarter stand at 0.57%, and that compares with 0.6% at the end of the previous quarter. I'm also trying to pull up provisioning, and the provisioning number, the total provisioning number has come in at 1,609 crore rupees for the quarter. And that is an increase from the previous quarter, but it's a reduction compared with the year ago number. The year ago number stood at 3,300 plus crore rupees. Provisions for non-performing assets stood at 3,293 crore rupees in the quarter gone by. I'm trying to find out what is leading to this significant beat. In fact, we'll have analysts joining in, and we'll also probably have Harsh from the research team getting you some perspective on that. Harsh is in fact joining me right now. Harsh, substantial improvement in the profitability. What is leading to this? What is leading to the beat in numbers?
Well, thanks for that, Alex. First off, on the NII front, just a single-digit growth in NII seems like margins still holding up. So that seems to be the one positive. The decline doesn't seem to be major when it comes to margins. But of course, we'll have to wait that margin number to come through. That's going to hold the key. The other piece, though, which is really standing out is OPEX has come off, and therefore your operating profit has gone up quite substantially. Let me read the number out. The operating profit number has come in at 28,747 crores, 28,750 versus the 24,000 crore number same time last year. So you've seen, and last quarter, when I'm looking at that operating profit number, it was at 20,000 crores. So even sequentially, that number has gone up quite sharply, and it's largely because of OPEX. The other piece you did speak about and you did touch upon, Alex, is the provisions number. The provisions number has actually been largely stable, in fact, and on a low base, of course, it's gone up sequentially, but it's at 1,600 crore. It's still a very solid number from a provision standpoint. What has all of this done? Well, profit after tax above the 20,000 crore mark now. That's a sharp increase when I'm looking at it year on year as well. So that's the one key positive that I take away from this. Your ROAs have really done well. 1.36% on ROAs. I don't think too many analysts had put that kind of a number on SBI, especially given the way in which ROAs have already moved, which means that it's already been a higher base. 1.4% ROA is a very strong number. It's a strong beat.
Absolutely. In fact, let's find out what Aditya Shah of Hercules Advisors has to say about the numbers. Aditya, seemingly a significant beat on the net profit number, beating consensus estimates handily. And what Harsh was just pointing out was the return on assets, which is standing at quite a substantial number as well. What is your initial take on the numbers?
Yeah, the numbers look quite okay. We need to wait for the loan growth and the deposit growth. We need to understand if there was a right pack that they have taken because of which the net profit number really is standing out. As Harsh was saying, the slippages are significantly lower, so that is a tad bit positive for the stock. But I'm just awaiting the details on the presentation, which will break down the results for us. Overall, on the first look, it looks a good number, but details need to be seen.
Okay. Talk to me about the asset quality, because I think broadly this is in line, right? And you're talking about an improvement, in fact, on a sequential basis. I'm looking at gross bad loans as a percentage of total loans at 2.24%. That compares with 2.42% in the previous quarter. And I think net NPAs also improvement is there. It's 0.57% compared with 0.64%. So that's a significant positive, isn't it?
Yeah. So as with all large private sector banks and the large PSU bank, which is SBI, we have seen a sequential improvement in the asset quality. We have seen slippages being contained by all of these banks. And in line with that, SBI is also doing the same thing. SBI's asset quality is stable. We need to understand the granular details about how the retail portfolio was performing and how the corporate portfolio is really performing. But overall, if you look at the slippages number as well, it is at a multi-quarter low, which means that overall it is not a problem. So in my opinion, the slippages for all banks over the next 2 to 3 quarters will be under control. Nothing to complain about. Now we need to first understand the project financing bit which the RBI has given, because SBI is a big player on the project financing side of it. And we need to also understand the segment-wise slippages as well. So overall, not a problem slippages as of now.
Okay, Aditya, Harsh also joining in. I want to try and understand the loan growth. When I'm looking at the standalone balance sheet itself, advances have gone up 5.5% on a sequential basis. That looks like a very strong number right off the bat. Just wanted your thoughts on this. Does it seem like the pipeline which they had in terms of corporate loans, that seems to have materialized? What exactly is happening, or is it just a very strong quarter? Is it seasonality?
So Q4 generally tends to be a strong number for most banks, and for SBI also it has been really very strong. Retail loan growth, in my opinion, has picked up for SBI, which is a big contributing factor, which is being seen in the margins as well. We need to understand the granularity of that loan growth, but I suspect that a lot of it will also come from a double-digit retail loan growth. So overall, loan growth was never a problem for SBI, will never be a problem for SBI going forward, because as the economy revs up, the demand is really strong, and we've seen all private sector banks growing upwards of 15%, the larger ones. Similarly, SBI has also grown really well. So overall, good number on the loan growth side of it.
Okay, and Aditya, a quick take with regard to provisions. What's your take on the provisions number? And second is how you're looking at valuations for SBI at the moment. Stock has run up quite substantially. In fact, 2-3 years back it was at 200 and sub 200. It's currently at 820. So what's the sense now with regard to valuations? So provisions and valuations, please.
So provisions, I have not seen the provisions number, so let's wait for
around
that
1600 crore, Aditya, ballpark.
Yeah. So provision numbers are not that high. Slippages are also not that high. So overall, SBI is reaping the benefit of the cleanup that they have done over the last 2.5 years. So I don't think that over the next 2 to 4 quarters, slippages or provisions should be a problem for SBI. The ROA number should be really good, and we are staring at a decadal high ROA for the bank. So this is really good for the bank. But from a valuation perspective, all of this is now inside the price. The bank is now trading at 2 times price to book, which in my opinion is not cheap. All large private sector banks are now trading at about 2 times price to book, and SBI is also trading at 2 times price to book. So the stock is not cheap. It has already priced in the decadal high ROA that is really coming about. So now if you have positions in the stock, you should continue to hold the positions in the stock. Incrementally, if you want to make positions, I will suggest to wait for some decent amount of correction before you make position in the stock. But overall, thumbs up to the results.
Okay, one last question from my end, Aditya. This is on the OPEX, because I heard some comments earlier about that being a bit of a question mark heading into the results. What was your own expectation on the cost side? Did you anticipate that this would be a high number?
Yes. So there was a news that SBI had undertaken some wage revision for all of its workforce, and because of which the operating costs were supposed to be higher this quarter, and all the estimates were also pointing out to that fact. So we really need to understand the granular details, if that cost was taken in this quarter or was it postponed. But OPEX-wise, the bank is really very optimized, and these one-off costs are just something that we don't need to take too seriously. Going forward, the only thing that will now matter is the loan growth, the deposit growth, and how fast are they able to, how much they are able to control the slippages. So in my opinion, OPEX was a one-off, which I had already expected, and most reports had already expected it.
Okay, Aditya, thanks so much for joining in and giving us that initial perspective. Of course, there is going to be a press conference in a very short while, and we'll get more details. The stock has in fact come off quite substantially from the high point of the day. It was up as much as 2% immediately after the results, possibly on the back of that big beat in the profit number. We'll have to get some clarity as to how that has come about. And some of that, of course, is going to emerge from the net interest margin number, which will emerge. If I'm not mistaken, the expectation was just a little over 3%, and we'll have to see how that has come through in the quarter gone by. I also want to address Asian Paints, because this is a bit of a disappointment, if I can call it that. And you have the revenue number that is come in at 8,731 crore rupees in the quarter gone by, and that is a decline of about 0.7% on a year-on-year basis. The EBITDA has come in at 1,691 crore rupees. That is a decline of as much as 9.3%. And this is where the issue is, because that has resulted in a pretty flat bottom line number of about 1,275 crore rupees. The margin has come in at 19.4%, and you're seeing that there is a contraction compared with the same period last year. So a combination of factors possibly playing out for Asian Paints. You have a contraction in the margins that is probably led by competition in the space, and also margin or rather raw material pressure in the space. But that will be borne out perhaps by what Agam will tell you. Agam has looked at the numbers more closely than I have. Agam, what's leading to this contraction in margins, and what did you take from the numbers?
Right, Alex. So what's actually weighing down on the margins is a couple of factors. Firstly, weaker than expected revenue growth. In fact, we're looking at a decline there. And secondly, there has been certain impact when it comes to price cuts coming in. But before I tell you a little more in detail as to how things have panned out, let me just start by talking about the headline numbers. Firstly, as you've already mentioned, we are looking at barely any amount of growth. In fact, we're looking at a top line decline of around 0.6% year on year. Margins coming in around 19.4% against expectations of margins being flat year on year, and consequently your net profit has grown only nearly 2% as against expectations of around 1,334 crores. We're getting a number of around 1,257 odd crores. Now the decorative business volumes have seen a growth of 10%, but the reason why your top line has declined is because the company has taken substantial price cuts in the quarter gone by. Moreover, the company has mentioned that there has been a sustained weaker demand in the environment, and also there has been down trading in several of its product categories, which means that a lot of your consumers are looking to consume less in terms of quantities, when that's had an impact on your overall top line. Naturally, this trickles down to your revenues as well, notwithstanding the price cuts that the company has taken as well, and that has had an impact on margins. And besides that, the only positive perhaps here is that the gross margins did see an expansion of about 120 basis points, but we must also remember remember that crude has remained elevated for the quarter gone by, and that has a lag effect coming in, and that is likely to have an impact in the coming few quarters, especially when it comes to crude derivatives, titanium dioxide being a crucial input in a lot of the paints companies. And for that reason, there could potentially be some more concern with respect to margins, which have already come below street expectations.
Absolutely. Thanks so much for wrapping that up for us. By the way, Asian Paints underperforming, down about 3.5%. Earlier in the day, of course, the worst performer on the benchmark Nifty 50 was Larsen & Toubro. I do not know where it's currently trading. Maybe we can pull that up to see which the biggest contributors are to the decline. So Larsen & Toubro, in fact, losing more ground. Let's pull up the benchmark Nifty 50 to see where it's currently trading. And you have sharper cuts now. And in fact, it is at the low point of the day, down 1.2% or thereabouts, because Asian Paints has joined the bandwagon in terms of the sharp declines that you're seeing for the large frontline stocks today. Just one more earnings that I want to point out to, and that is Balaji Amines, and this is a stock that is under a little bit of pressure as well, and this is on the back of earnings. It has reported a revenue of about 414 crore rupees, and that is a decline of 12.2% on a consolidated basis. This is compared with the year ago quarter. And EBITDA has come in at 98 crore rupees. That's a growth of about 5%. Margins have come in higher at about 23.6% compared with 19.8% in the comparable quarter. Net profit, of course, coming in 31% higher at 72.5 crore rupees. But the stock is taking a bit of a beating. Perhaps that is on account of the revenue decline that you've seen of as much as 12% in the quarter gone by. Let's talk about a few more stocks then, and in fact, let's look at the contributors on the Nifty 50 just to give you a perspective of how things stand right now. And let's pull that up on the screen. Right on the top of the screen on the decline side, you have Larsen & Toubro as well as HDFC Bank and Reliance Industries. So the heavyweights really proving to be a big drag on the Nifty 50. But there's more to talk about, and we will stick with earnings. Remember, in just a short while, you will have the press conference of State Bank of India to talk about the fine print of their results. So do stay tuned. This is NDTV Profit. Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about
Good afternoon and welcome to NDTV Profit. On earnings edge today, we're tracking Greaves Cotton Limited, and we're joined by the CFO, Ms. Akila Balachandran. Hello, ma'am, and thank you so much for joining us today here at NDTV Profit. For just the Q4 as well as the financial year 24, it was a tough financial year for the company. I just wanted to check if you could, run us through how the company has performed in this financial year according to you. What do you see the key triggers going into the financial year of 2025?
Thank you so much for having me on NDTV Profit and allowing me to share insights about Greaves Cotton's performance for this year, FY24. Let me split this in two parts. The Greaves Cotton performance on a standalone basis, we have done exceptionally well. Our top line grew 17%. Our top line grew 15%, I'm sorry. And we have registered a decadal high profit of 366 crores. Our margins have also grown by 56%. And in terms of margin improvement, there again, we have done a remarkable work of improving by 325 basis points. This brings us back to our pre-COVID levels of 13% plus margins. If you remember, over the last few years, we have been undergoing a transformation journey and trying to pivot from a single product company to multiple products, multi-fuel, fuel agnostic, also improving our product portfolio, applications portfolio, as well as the geographical reach. All this has played off, and in this continuing journey, FY24, we have been able to deliver good results. Our other company, Greaves Electric Mobility, before that, let me pick up Excel Control Linkage. Last year, we had invested in Excel Control, and I'm happy to share that this has again been an extremely wonderful journey for us this year. We grew top line by almost 40% at extremely healthy margins of 30% plus. This integration of Excel and Greaves Cotton continues in a very professional and in terms of Greaves Electric Mobility, as you're aware, early last year, we had the notice from MHI. As an organization, we have responded to the government show cause notice. We've also repaid all the demands and we await the next steps from them. This has definitely impacted the company's performance. However, the company has put in place a roadmap for new product launches as well as a path to profitability. And though it has been a challenging year, I think we have done very well to manage the journey so far.
So I just want to take forward the point that you made on the two-wheeler engines. I think from a presentation also we can see that there was roughly on a consolidated levels that margins have been impacted majorly. And one of the key components of this has been the 56% fall in e-two-wheelers. What do you attribute this particular fall to? And I know that the company has launched a new product as well. But just in general, I wanted to talk because you already have roughly 3 to 4 products in the market. What led to this major fall of roughly 56% for the whole financial year of 2024?
If you remember, we had a notice from MHI.
Yeah.
And we were blocked from the portal. We therefore could not avail the subsidies going forward. We have already responded to the notice and we've also refunded as per the claims without any prejudice. Parallelly, we have continued selling our products, but we do not get the benefit of the subsidy. This really has given us a challenging year.
But going forward, ma'am, because we do see that, the current market, there are roughly 2 to 3 legacy players which have come back and launched e-two-wheelers, while the existing 2 private majors in the electric scooter market have launched cheaper variants. Looking at this market currently, the company has launched a Nexus recently, which is priced above 1 lakh rupees. I just wanted to get a sense of what the company is seeing, because we're seeing that most players are going for a cheaper variant to get in more consumers to buy electric two-wheelers. So what is the thought process there?
Our product is targeted at the family segment. It's an extremely high performance family product, one of its kind. It has multiple features, and some of them are first of its kind in India. We've also done a complete campaign around it from Kashmir to Kanyakumari, and in this process also done multiple records in the India Book of Records. So we are very confident that with this kind of a superior product targeted at the family, we will be able to attract the right kind of customers going forward.
And while you say that the two-wheeler space has been slightly affected, and you also mentioned, could you quantify the amount that the company has repaid back to either NHAI or the consumers for the whole financial year of 24?
Yes. So if you were to go back and see, this has been all disclosed in our financials. The MHI notice had asked us to refund 124 crores plus interest, which is what we have refunded back to the government.
And we've also seen, ma'am, that certain companies have made their plea to the government to get back some of the amounts that they were charged. Are you currently in conversations with the government for this particular said amount? And what has been the progress? Because I believe that this was at the back of Q3, somewhere around October of last year. Suppose that, what has been the conversation with the government for this specific amount? Has there been any progress on getting it back?
We have, on our side, complied with all the requirements of the government, and we are in constant touch with them. At this point, I will not be able to disclose beyond this, since the matter is in discussion with the government.
Understood, ma'am. And one segment that actually has been doing very well for the company is the E3 wheelers. I think you all have had a launch also this particular year. How are you seeing the market going forward in financial year 25? And I also wanted to understand which are the key states or regions that the company is targeting, because we've seen a lot of competition from the heavyweights also across India who have larger distribution networks. So specifically for the company, how are you seeing the next financial year, and which are the kind of regions do you target that you've already entered per se and looking to enter also in this year?
So the good news is, in the three-wheeler space, we are back on the portal. So we are eligible for subsidies wherever it is applicable. We are seeing a lot of traction, and we have plans to push far more aggressively going forward. Again, some of these are very specific, and it will be difficult to get into details at this point in time.
Any particular region, ma'am, that you can mention? If you are looking at getting into West more, or North or South, is something that the company's stronghold is currently?
Look, we would have a plan to go on an all-India basis in a very structured manner. I wouldn't be able to share details at this point in time.
Understood. And for the electric mobility, if I see for the whole financial year, the revenues were down roughly 40 to 45%. Now going forward, since the three-wheeler is also on track, and you've also had the Nexus launch in this particular financial year, how are you seeing this on revenue growth per se? Do you see that the company will be able to be back for this particular segment, back in black for financial year 25?
As you are aware, we've already launched a new range of products, which we see a lot of traction. On the three-wheeler side, again, we have done multiple launches. We are strengthening our distribution network, and we see we're back to number 5. We have got good traction and market share. We will definitely be able to bounce back in FY25, though I will not be able to give you any specific guidance on that.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target?
Hi, welcome. You're watching NDTV Profit. I'm Harsh Saita, and we're going to focus in on earnings. Slew of numbers coming through, and we have India Shelter Finance, which has disclosed its Q4 numbers. Of course, a very strong growth of a low base is how I would sum it up. But overall, also the numbers look fairly healthy. Is this sustainable or not? Whether asset quality can sustain or not? We have Mr. Rupinder Singh, who is the managing director at India Shelter Finance, joining us. Welcome, Mr. Singh.
Thank you so much, Harsh, for inviting me on your show. Thank you.
Right. Mr. Singh, quickly want to try and understand from you whether this kind of 40% growth which you've clocked in terms of CAGR over the last 3 years or so, and the almost 40 to 50% that you clock consistently on this higher base, is that sustainable? And what's the thought process for FY25? What's the target?
I think India Shelter Finance Services is basically clocking the same kind of growth from last 6-7 years. In fact, affordable housing is the segment which is in demand today. There's a set of segment which was not a part of financial inclusion in earlier days, but as it is picking up, it has been realization there's a lot of housing shortage. In fact, one of the data says that there's a shortage of around 9 to 10 crore homes across country. And most of these houses are in the category of lower income group or maybe what is called economically weaker section. And India Shelter plays the role of financing these kind of customers who are looking their first time homes. So yes, demand is there, and market is also building up, growing up. There's a lot of recognition coming around from the customer side and from the this overall ecosystem. And that is helping us to, have this sustainable growth around. What we are seeing, obviously, not lower base, and as the time grows, The growth will be there, but I feel that 30-35% of growth is quite sustainable.
30-35% growth quite sustainable. I want to try and understand from you the spread and margin guidance as we go forward. Your spreads have been largely stable in an otherwise difficult interest rate environment. Tell us what helps you stand out and what allows you to maintain that spread. Cost of funds also haven't inched up significantly for you.
So the customer, what we are targeting belongs to these markets, tier 3, tier 2, which as mentioned is not a large of financial inclusion. They are most of them the first time home loan borrowers. In fact, 70-75% of the first time mortgage home loans borrower. And a pretty large chunk out of that is a new to credit also. So they have this need as well as dream of building their own homes. But obviously larger ecosystem doesn't support them. Where when we play the role, that becomes a quite big support to that piece. So this is a demanding market. So the compression or suppression of spreads is being taken here because of that piece. On the other side, with the cautious actions towards our treasury management, we are able to control also the cost of fund to the large extent. Thanks to institutions like NHB, National Housing Bank, which are always support to institute like us who are getting this kind of segment. In fact, today 15-16% of our funding comes from NHB. That again at a very cost which is very sustainable for us, help us to build this business around, which we automatically pass on to the customers finally. So this is a situation which is symbiotically strong for customer, for ourselves, and the government initiatives which comes to in a message from the NHB side.
Sure. So as your balance sheet grows from 6,000 to 8,000 crore, is this cost of fund, is this kind of margin trajectory sustainable? Is that what one should take away? And not just from 6 to 8, you'll probably double up in the next 2 to 3 years. Is the cost of fund as well as the margin and spread trajectory going to be very similar? Is that what one can expect?
Good news is we were rated A+ last year with a positive outlook by CARE and ICRA, one of the rating agencies. In fact, in the last quarter of this financial year, Q4, we were rated AA- by one of the leading rating agencies, India Rating. So the rating also supports somewhere when you are discussing with the banks to get funds around that side and helps to bring down cost of fund in some way. And we also have a expectation that once elections are over, the new interim budget comes, there are always benefit which comes from the government side through NHB toward this sector particularly. So these are the few points which gives a positive notes around that side. And I think even the rate cycles remain consistent in market, what is running today, still with these couple of new tractions, we would be able to get actually benefit of 15 to 20 pips this year. And as time progresses, your increasing of balance sheet is increasing, you become a part of a larger ecosystem, then this cost of fund is also going to come in a better way. Having said so, our base is largely in tier 3, tier 4 markets, and we are expanding ourselves into these markets as the penetration keep going on. This is a set of customer which we want to cater. So I feel maintaining spread of 6% is not a challenge for us.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day.
Well, thanks for tuning into India Market Close, and it's not turned out to be a very pretty picture today. We are trading close to or at the lowest point of the day. Earnings haven't helped either, and at about 258 points, very close to 22,000. In that range, I mean, if you look at the Nifty over the last 3 months, it's been a range. We've been oscillating between 21,750, 21,500, whatever you call it, as a low, and about 22,700, 800 as a high. So that's pretty much the range in which we've been moving around. The banking index should come up on your screen, was holding out for a better part of the day, but 309 points lower in the red currently. And the mid caps and small caps too have gone down. I just want to pull up India VIX once before we get to specific stocks and just show what's happened there as well, because the broader markets currently are down and VIX at 17.73 is up another 3.8%. Not looking good. Volatility continues to rise every single day. It's not alarming levels as yet, by the way. Remember, the truly alarming levels are northwards of 25, closer to 30 maybe. But 17.7, substantially higher than the 10 number that we had about 3 weeks ago. Bring up the heat map. A lot more red, very little green. In fact, just a single row of green, not even that. Hero Moto holding out, though it's still, it's lower than what it was, but still up about 3.5. SBI about 2.5. So that's holding out. Tata Motors, M&M. So autos in the fast lane, if you will. Everything else has looked wobbly in trade. L&T has succumbed to serious selling pressure. Asian Paints not far behind either, 4% lower. ONGC, BPCL, so PSUs per se, which were doing very well yesterday, have all come back in the session today. So that's unraveled in a hurry. Pointless pointing out what's not doing well because almost everything is not doing well. The only ones which are kind of doing well, as I said, are autos. And on the flip side, of course, L&T kind of takes the cake as being the key loser and is now trading at the low point of the day. Result boys, L&T, Asian Paints, all of them reacting and reacting duly. But broader markets have even larger reactions as well to results and otherwise. Harsh, what's standing out?
Well, yes, absolutely. Let's pull up the mid-cap and the small-cap indices. And clearly, Neeraj, as you correctly pointed out, there is quite a bit of pain there, more than the benchmark. 1.3% lower for the mid-cap, the small-cap. Nearly 2% of a cut on the Nifty small cap. So those two are feeling the pressure and the pinch. Let's pull up some names, especially on the back of numbers. Let me start off with something like a Bajaj Consumer, down 7%. Piramal Enterprises down 9%. Piramal Finance now, I dare say. Sula Vineyards down 8.5%. Margin picture not up to street estimates. Larsen & Toubro, of course, we've spoken about that. Tata Power down 4%, Home First down 4%, Godrej Agrovit, if we can pull that one up, almost 4% lower. You have BSC, Kalpataru, both of them down 2.5 odd%. So plenty of pain. In terms of the positives, and maybe more importantly, the positives in this market, SKF up 7%. Vijaya Diagnostics, wee bit of margin decline, but nonetheless, stock up 7% thereabouts, and TVS Motors 4% higher, holding up so very well. Kirloskar Oil also up roughly 2%. I've pretty much marked all the gainers on the back of numbers outside of SBI, and maybe if we can flash a CAMS as well, up 1% or so. Those are pretty much all. In the broader markets as well, maybe an HPCL, BPCL, let's pull those up as well, 4% lower on the back of numbers. And IOB is down 2%, PNB is down 1.5 odd%, and an ESAF, Small Finance Bank, that one down 5.5%, in fact down since the morning, that one as well. So we have plenty of stocks to talk about, of course, try and dissect. We also have the SBI presser, coming up very, very shortly. But let me quickly bring on board Rajesh Palvia of Axis Securities and Chakri Lokpriya of Red Strawberry. First off, Rajesh, on to you. Markets feeling a bit of pressure. Your evaluation both on the Nifty as well as the Nifty Bank.
Where we are seeing sustained supply pressures.
Rajesh, please give us a second. Rajesh, we'll have to cut across to the SBI presser as they are talking. We'll come back and get your views, please.
For the economy. Let me start first with a brief description of the present global and the domestic economic scenario. Global growth remains resilient with easing inflationary pressures and tight employment conditions, in spite of geopolitical and extreme weather event risk. The IMF, in its latest April 24 World Economic Outlook, raised the global growth forecast to 3.2% for the year 2024, which is 10 basis points higher than its January 24 update, and expect the global economy to grow at the same pace in 2025. Global headline inflation is expected to fall from an annual average of 6.8% in 23 to 5.9% in 24 and further to 4.5% in 25, with advanced economies returning to their inflation target sooner than the emerging markets and the developing economies. Commodities and energy prices can drag the economic and the growth prospect by infusing sudden shocks on the supply side, a collateral impact of escalating geopolitical tensions at multiple fronts. However, in this backdrop, as far as India is concerned, the conditions are, however, shaping up for an upshift in the real GDP growth, backed by the strong investment demand and upbeat business and consumer sentiments. CPI inflation has already gravitated to 4.9% in March, after averaging 5.1% in the preceding 2 months. CPI inflation is expected to moderate in ensuing months and is expected to taper to 4.5% in financial year 25 compared to 5.4% average in financial year 24. In financial year 24, the credit offtake of the all scheduled commercial bank recorded a growth of about 20%, while deposit grew at about 13%, and the momentum with some moderation is expected to continue in the financial year 25 too. I'll now discuss the broad bank's performance parameters. Once again, we have delivered excellent numbers. I'm happy to share that our net profit for financial year 24 is the highest ever at rupees 61,077 crore, showing an increase of 21.59% over financial year 23. Our net profit for the quarter 4 of the financial year 24 is at 20,698 crores, which has increased by 125.87% sequentially. This is despite incurring wage revision expenses of rupees 13,387 crores during the current year period as per the bipartite wage settlement, and after absorbing the additional liability to the tune of rupees 7,100 crore relating to pension liability and the DA relief neutralization in the third quarter as a one-time exceptional item. Our ability to absorb the above liabilities without significantly impacting the long-term profitability outcomes of the bank demonstrate the resilience of our balance sheet. ROA of the bank stands at 1.04% for financial year 24, and it has improved by 8 basis points over financial year 23. The ROE for the financial year 24 is at 20.32%, which has improved by 89 basis points over financial year 23. We have been consistently delivering ROE in excess of 15% for the last 7 quarters. The cost-to-income ratio of the bank is at 55.66%, including wage revision expenses and excluding the impact of the one-time exceptional item of pension liabilities and dearness relief neutralization in quarter 3 financial year 24. Excluding the wage revision and one-time exceptional item, the cost-to-income ratio would be at 49.34%, which is an improvement of 315 basis points over financial year 23. Non-interest income has shown a growth of 41.15% in financial year 24 over financial year 23. Our deposit has grown by 11% YOY and term deposit has grown by 16% YOY. We are mindful of our liability portfolio as it provides a stable stream of resources for us. We continuously monitor the concentration of our deposit profile daily, ensuring that dependency on the wholesale funding is contained within the prescribed levels. Liquidity coverage ratio stands at 124% as on 31st of March 24 and is well above the regulatory benchmark. I am happy to highlight that the credit growth has been robust across all the segments. Our retail, agri and MSME, which is popularly known as RAM, advances have crossed 20 trillion mark during the year. Out of the above, retail personal advances constitutes 13.5 lakh crore, which is 13.5 trillion. Agri advances are at 3.05 trillion and MSME advances stands at rupees 4.33 trillion, growing at the rate of 14.68%, 17.92% and 20% respectively. The corporate segment is also showing healthy growth at 16% plus YOY growth. I am glad to share the progress we are making in digital banking. 61% of our savings bank accounts are opened through YONO in financial year 24, and we are also leveraging analytics with significant business accretion. Now it stands at 1.37 trillion as against 1 trillion in the last year. This is essentially attributed to our analytical leads, which we are leveraging full, and it has led to about 32% growth in the digital acquisition of the business. With regard to asset quality, our gross NPA ratio has improved by 54 basis points YOY and stands at 2.24% as of March 24, and continue to be at its lowest in more than 10 years. Our net NPA ratio has improved by 10 basis points and stands at 0.57%. Slippage ratio for financial year 24 has improved by 3 basis points YOY and stands at 0.62%. The consistently improving asset quality is also reflected in our credit cost. For financial year 24, it stands at 0.29% and has improved by 3 basis points on a YOY basis. We are well provided for our loan book with PCR including OCA standing at 91.89% and PCR excluding OCA stands at 75%. While we are glad about the outcome in the current quarter, we are also conscious of our areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings deposits. The cost base of the bank is high. However, the same also reflects our focus on compliance and establishment costs. We aim to lower our cost to income ratio by focusing on the income side. Our CET ratio now stands at 10.36%. It is the highest since the implementation of Basel III norms. Additionally, the current ROE profile of the bank remains above the credit growth trends, and hence we foresee CET1 accretion going ahead with the help of our plowback of the profit. However, the bank is open to raising equity capital if the growth trend so warrants. Our subsidiaries are also consistently performing well and continue to create significant value for all our stakeholders and most importantly for our customers. To conclude, I want to thank you all for your support to the bank and also showing the confidence in the bank's ability to perform. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. My team and I are now open for taking questions from all of you. Thank you.
Thank you so much, sir. Now we move to the question and answer session with media. To ensure seamless flow of the session, we will move from this end to that end, allowing everyone an equal chance to ask a question. We request you to please follow the format and restrict yourself to 2 questions. Focus on bank. Now I request Gopika from Mid to start.
Congratulations, sir, on a good set of numbers. To begin with, could you tell me what led to the increase in fee income this quarter, especially the miscellaneous fee income? So sequentially, fee income has seen a good growth. Could you tell me that? My second question is on the recent RBI draft rules on project finance. How have you assessed it? What kind of an impact will this have on SBI's P&L?
Yeah, the first question is relating to your fee income, and fee income, the major contributor to the fee income has been the loan application fee that has gone up, and it has been contributed by CCG, Commercial Client Group, and also by SME also. And also that is nothing but a reflection of our growing loan book. And apart from that, of course, we are seeing good growth in terms of our forex income, and also we are seeing good growth in terms of our cross-selling income. So I think the fee income piece is something which is, I hope that we will be in a position to sustain this, because now it has become part of the way we conduct our business. Your second question, which is relating to the RBI recent discussion paper which has been brought in. Well, I think we have done some assessment, but I would say that as of now, this is too premature to really comment on that, because it is still a discussion paper, and we will be reaching out to RBI and also with our views on what they have proposed, and let us wait for the RBI final decision in this matter. But nevertheless, I would only like to say that we have made some broad assessment, and based upon those broad assessments, even the incremental provisions which are required to be done would not be really significant for us. We will be in a position to absorb those kind of additional provision numbers without much of disruption. And also the fact remains that if at all those become the reality, maybe the pricing of such loans will also be revisited.
Next question is from Joel from Economic Times. Good afternoon, sir. I wanted to understand, you all have increased your provision, though the asset quality is improving year on year. The provision, have you made any counter-cyclical provisions, or is it something different there?
No, see, what happens is even for the standard assets also we are required to make the provisions. So because our loan book is growing, so that is leading to additional provisions. It is not because of the quality issue. Yeah.
Also, net interest income is a little bit 4% growth, 3% growth, single digits. NIMs also have fallen here. I just wanted, firstly, why is net interest income? Is it because the cost of funds is increased? Is that the main reason?
See, the point is that there is always a time lag for the readjustment when it comes to the loan book and also the deposit book. But I think we have already plateaued as far as our deposit cost is concerned. So I don't think so that we'll have even more impact on this. And secondly, as far as the loan book is concerned, that also we hope that we will be having a repricing of the loan book also going forward. So I think the net interest income, what you are observing today, and what you mentioned in terms of the growth is something little than lower than what you expected. This is essentially attributed to that.
So it will only improve.
It is only. We are only.
So the outlook for the
NIM actually, I think globally, if at all you will look at it in the industry, the NIMs have come down. But as far as we are concerned, we have assessed and we are hopeful that we should be in a position to maintain the NIMs at this level. And
Okay, that was, of course, Dinesh Kumar Khara, who is the Chairman Managing Director at SBI. Spoke about various pieces. Let me just try and sum it up. First off, on the upside, he's given plenty of positive commentary. PAT at record highs both for FY24 as well as Q4. Wage revision expenses, despite being incurred, yet the balance sheet was able to absorb all of those and churn out a PAT ROE in excess of 15% in the last 7 quarters, which is extremely positive. Credit growth continues to remain robust. He spoke about the RAM portfolio. He also suggested that FY24 slippage ratio is lower than FY23 by 3 basis points on a lower base, which is a very, very positive piece. On the liability side, he said that he's looking at strengthening the current account number versus savings account where they already lead. Cost to income is yet to come off from above that 50% number, so still need to see progress, and that's possibly a lever going forward. Fee income, he believes, is sustainable. It's a very strong fee income number, 50% sequential, 24% year over year. That's probably what has led to this beat in Q4, and he believes that that is expected to sustain. He didn't talk about how much of that number was a one-off, but it's expected to sustain, which is a positive, at least for me. And he's also spoken about RBI's draft paper and believes that possibly costing for some of these, or pricing for some of these loans may start to go up. He's also spoken about deposit repricing largely over and margin stability going forward. So plenty of positives coming through, Neeraj, with regard to the commentary from SBI, at least the first cut of that commentary.
Yeah, but it's showing the stock still up about 1.5% on a day when the markets are down. Chakri Lokpriya with us as well, as is Rajesh Palviya. Gentlemen, thanks for being by patiently. Chakri, let me just first come to you on this SBI piece, and then we'll get in the market view, because that is the bigger worry. But let's just get SBI out of the way. What did you make of the commentary and the results?
SBI, I think, the numbers were excellent. It gives you a very good indication that the balance sheet is exceedingly strong. The outlook for the company is very strong in terms of its loan book. The balance sheet is extremely well positioned to absorb RBI's new provisions, even if they come about in its entirety. And their NIMs are going to be maintained at current levels, which is excellent, with an ROA improving to 1+, and an ROE is further improving, and its credit costs coming down. This is the perfect combination any banker would look forward to. And so I think, the next stop for SBI, it's a 1,000 rupee stock over the next 6 months. I think valuations are pretty much on its side. And this is the story for the broader market. Wherever we are seeing companies able to take market share, beat guidance, provide an outlook of improving scenario, will be rewarded.
Okay. Well, but the market at large seems to be a bit wobbly. Banks are correcting. Rajesh, sorry we had to cut to SBI, but let's get back to your thoughts because we are now trading at the low point of the day, sub 22,000. Does it open up more downsides or are you now starting to hunt for supports?
So Neeraj, Nifty is now trading almost near to 22,000 mark. So we have broken the important put-based concentration in this fall today. Now we are trading below to 22,200. Nifty now slipped below to 50-day moving average and now approaching to 100-day moving average support area. So looking at the recent fall in last 4-5 trading session, the near-term trend has turned on the bearish side. If at all Nifty breaks below 22,000 mark, then yes, this fall can extend further and Nifty may slide further towards 21,800. That's the next important support area for the Nifty based on the put concentration at this juncture. Sell on rise would be the strategy at this moment till Nifty not able to take out about 22,250 on a closing basis. So whatever minor pullback if we get in the market should be used as a selling opportunity for Nifty, as the broader market is showing supply pressure. Most of the sectors which were in bullish zone are attracting the profit taking at this moment, and the underperforming sectors are getting more short selling at this juncture. The major dragger is banking sector at this moment. Bank Nifty has slipped below to 48,000 level, so that's the negative development at this moment for the Bank Nifty. So if it remains below to 48,000 level, then possible down move can extend in the Bank Nifty also, and then lower side target we could see towards 47,200 also. So for Bank Nifty, 48,000 is very challenging level at this moment for near term trend. So we believe that sell on rise should be the strategy for trader at this juncture for Nifty as well as for Bank Nifty.
Okay, more bearish at least at the outset, Rajesh. Rajesh, let me, in this market, understand your picks before we move on.
So first pick is Titan, that is on the short side. Stock is now slipped below to 200-day moving average. The way stock has broken its important support area on daily, weekly time frame, that clearly shows that some liquidation is taking place, and we may see furthermore bearishness in the stock. We are projecting target towards 3,200 to 3190 kind of zone on the downside. So Titan future one can go short. Keep your stop loss at around 3310. On the sector where we are seeing some buying interest, that is automobile, and from that space Hero Motor is looking promising. So here we are bullish for Hero Motor at this moment, as whole automobile space is still holding the ground on the higher side. So we believe that some outperformance is likely to there in automobile space, and Hero Motor is our preferred choice. We expect that Hero Motor, if it continues to hold above 4730, then possible rally can extend for Hero Motor towards 4850 to 4880 kind of zone. So these two stocks at this moment we are focusing for trading perspective.
One positive, one negative. Quickly, Rajesh, if I can have your views on SBI.
So overall, SBI structure is bullish, though market is volatile. That's why we are not seeing, despite results, stock is not able to give any pullback action. I think once market stabilize at a certain point, SBI is ready to show a good traction in terms of buying, and possible target for SBI we can see towards 860 to 870 also for short term basis. So I think SBI one can remain on the long side of trade. Keep your stop loss at around 805.
Okay. We need to slip into a quick break, but we'll come back from the break, talk about a bunch of other things. We haven't quite discussed Larsen & Toubro thus far on the show. Asian Paints is the other big disappointment today, and there are a host of mid-sized names as well. So we'll talk about all of those. Stay tuned.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Okay, welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying tuned. Let me quickly take it across to Chakri. Chakri, your views with regard to the heavyweight Larsen and Toubro. That one has corrected nearly 5%. Let's quickly check as to how much, but roughly 5% odd. Is this a good opportunity in your view?
Indeed, I think it's a great opportunity to buy Larsen Toubro. The weakness is probably because, their margins came in slightly weaker. In the current environment of high interest rates, the fact that, they could still expect to grow their order book and another 10% going into the next year is a very strong indication of the kind of revenue growth that you can expect from the company. And as interest rates come down in the second half, whenever the RBI starts cutting rates, at that point, the margins again will start improving. Pricing overall will improve. I think L&T clearly is a buy, because it's all the various segments of the businesses are actually doing well.
Chakri, the fact that there is a bit of a lull around election season spending, does that not worry you? And if not just for L&T, but does that argument get extended to some of the other construction infra companies, that for the foreseeable future, there will not be new ordering, as well as execution might also see a bit of a pullback?
We're already in May. I think, as elections will be done and dusted in less than a month by June 2nd, 3rd. So, the ordering will be, whatever came to hold will again come back to life in about a month from now. And, it is very clear that, the industrial activity is very strong. Today's, for instance, you spoke earlier about SKF. It's a company which benefits from strength in automobile industry, industrial segment, railways, and defense. And it grew like 45%. So it's a good indication that these various sectors that it caters to are all actually doing really well. So, while infra, usually traditionally, it slows down in this time of the year, election and additional factor will pick up in a month or so.
Okay. By the way, it's not just L&T. Some of the capital market plays today have come off. So Motilal Oswal is down about 8.5. Angel One is down about 5.5. I wonder if some of the others too are correcting in trade today. But it seems that the pressure is across the board, and it's also there on Asian Paints, by the way. So bring that stock up. That's the other index major. which after falling 2.5% yesterday is 4.5% down. I would reckon this would be 52-week lows for Asian Paints. I may be wrong, but I think these are the lows for the stock. Priyam Tolia, Senior Research Analyst of FMCG at Axis Securities, who tracks Asian Paints, joins us right now with his verdict there. Priyam, what did you make of the numbers?
So yeah, the results were pretty much lower than our estimates. Of course, the other results were missed on across line items. The most disappointing part was on the top line growth as well as on the margins front. So as management has highlighted that they have delivered a 10% volume growth. But this was on account of the price cuts which company undertook, mainly on account of the on increased competitive intensity from the graphene, as well as the weak demand environment. So yeah, the numbers were pretty weak for Asian Paints.
What's the outlook, Priyam, going forward? Do you therefore now start to change your estimates? I understand that the con call is still awaited, some commentary still awaited, but what's your initial feeler? What's your initial sense? Do the estimates going forward start to get impacted given Grasim has come on board, and should one start to factor that into numbers?
So yeah, what we expect is that, and of course we have a neutral rating on the stock as of now, but we will look at the final numbers post the con call. But if you ask me from a near-term perspective, then of course there could be a margin pressure in the near term due to the price wars which is likely to come up on account of the new player which has entered. And of course the trend has not picked up. And if you see from a commentary from the press release, commentary from the management has said that they are positive in terms of the demand environment going ahead due to good monsoon. But what we feel is that the meaningful recovery in the paint sector would likely to start from the second half of the year. Right. So from a near-term perspective, what we expect is that there could be a pressure on the margins as well as the top line.
Sure. And recovery in decorative paints, we've seen some pressure there. Any visibility in your view? Sorry. Yeah, please go ahead.
Yeah. So if you see decorative paints, the premium side of the portfolio continues to remain under pressure, which was also in the Q3. However, if you see from a value and value side of the paints, they are doing well, right? So consumers definitely are downtrading in terms of that, right? If the consumers are downtrading, there could be a margin pressure as well on that side, right? So what we feel is that the near term, that we don't see a meaningful recovery for Asian Paints, but going ahead, we will see how the things pan out in terms of the demand as well as the competition. Right?
And with regard to rural, last off, we've seen rural commentary come in, talk of green shoots and the like. What's your sense of the impact on someone like an Asian Paints?
So again, we'll have to see how it pans out. Those more of the FMCG companies and other consumer companies have highlighted that they would see good rural recovery in this year. But from a paints perspective, as the competition intensity has increased, which will be the key monitorable going ahead, right? So how the competition intensity pans out, which will define the future course for the company as well as the industry.
Okay, thanks so much, Priyam, for joining us, giving us those insights, specifically with regard to Asian Paints. But let me take it across to Rajesh. Rajesh, Asian Paints under some bit of pressure today. What's the sense like for you? What are your trading calls on this one?
So there is an underperformance in the Asian Paint if we compare with other companies, other peer companies. Looking at the overall structure, stock is in a bearish trend at this moment, and now stock is approaching towards its critical support area of Feb 2023 swing low. So I think if stocks further fall from here, if it breaks below 2700 level, then this down move can extend further. As looking at the monthly, weekly time frame, stock is still in the bearish mode, and the stock has broken its important near-term support area also. Stock is slipped below to all its long-term, short-term moving averages. So below 2700, there could be another round of selling pressure we can see, and possible downside can be seen towards 2630 to 2600 also. So now on the higher side, 2760 and 2780 are likely to act as a major supply zone for any kind of minor pullback in the Asian pent, and trend is likely to remain on the bearish side for some more time.
Okay. What's standing out, of course, are some green pockets, Hero Moto, TVS Motors, and Tata Motors. So autos, M&M and Bajaj Auto too in the green. Somehow autos have withstood the selling pressure quite convincingly, I might add, because these are not chop change gains. I mean, 3% is pretty serious for a Hero MotoCorp on any given day, and especially on a day like this. Chakri, a word on this very large market mayhem that we're seeing and volatility, and then followed up with a view on autos, because they're kind of standing out very, very well post results.
Indeed, I think as we go closer to the June election date, I think, this volatility number will kind of increase because of the uncertainty about, day-to-day change of mood, what do you think is the outcome is going to be. And that actually is kind of throwing up some opportunities, because you have some very strong companies reporting some very strong numbers. So if they, for example, that SKF we spoke earlier, now that whole segment, since you said autos, that's also an indicative demand. If SKF does well, NRB Bearings, Timken, all those companies do well. They're also doing well in part because autos as an industry, amongst other industries, is doing very, very well. Now, if you look at Hero Motors and Tata Motors, TVS Motors, both have taken increased market share. Exports markets have improved. Margins are improving. And, the pricing is actually holding up. In a tough competitive market, if you can do all of these things, I think the volumes will only pick up in next half, in the second half of this year, and therefore I clearly continue to be positive on Hero Motors and Tata TVS Motors as well as Bajaj Auto.
Okay, but while autos are looking okay, we're now trading at the lowest point of the day for the Nifty. Keep that in mind, 21966, 1.5% lower for the Nifty. So it's now looking increasingly worrying from anybody who's looking at leverage trades on the long side, because save for autos, nothing else is working, and the index itself is trading at the lowest point. HDFC Bank, big contributor to the Nifty, very big contributor to the Bank Nifty's fall as well in the session today. And hence, I believe Rajesh was talking about how it's a sell on rise market, certainly not currently a buy on dips market. Rajesh, but autos have held out well. Do you see a probability of outperformance, or looking at the market scenario, avoiding longs is maybe a more preferred bet?
Yeah, I think avoiding long for trading point of view, yes, avoiding long is the best strategy at this moment, because the market sentiment is not good, and the way market is showing the selling pressure across the sector, that will not hold out auto also on the higher side. We may attract some profit taking in automobile also if market continues these kind of supply pressure. So I think for trading traders, I think they should avoid at this moment on the buying side of trade. Look for some opportunity when some pullback comes in the weaker sector and the weaker stocks. That stocks can be looked at to go short at this moment, or the stocks where we have seen very significant corrective move or trading near to the major support area, that can be looked at for some pullback action. But I think first Nifty needs to be hold out at certain level, because since morning we are seeing that continuous supply pressure is there, and even if you look at the now Nifty is slipped below to 22,000 level, and we have weekly expiry for these options, and the way put writers are trapped in this today's fall, they are now shifting their position on the lower side, and they are adjusting their positions and losses. So I think that furthermore supply pressure we may see in the coming trading session also. So at this moment we advise to avoid on the buying side. Don't take a larger quantity even if you are buying at this juncture.
Okay, clearly not in favor of buying at the moment, Rajesh advising. Let me though switch focus to the auto pack. Neeraj did mention that That one is doing fairly well, holding up fairly well on a tough day of trade. 457% higher on the Nifty Auto. We have Hero MotoCorp, which reported the highest ever profit, while TVS Motors also posted healthy margins. Both stocks have seen significant gains in today's trade. Look at the top two on the Nifty Auto, 3.5% up, both of them. So what are brokerages suggesting, and what are those key takeaways from both brokerages as well as the results? Puneet joins in with all of that.
Yeah, thanks for that. So Nifty Auto being the biggest gainer today on the back of these two positive results. Just for TVS, the numbers came after market hours. Revenue up 23% compared to the previous year, while EBITDA also grew roughly 36%, coming in at roughly 11.3%, which is now the new normal, as the company said. On the PAT level, profitability is up roughly 18%, and the positive view was supported by the brokerages as well. Key highlights for the quarter was the first time ever is the company selling upwards of 40 lakh bikes in a financial year, while they said that they will also be introducing multiple variants of the iQube, which will be key to compete with the likes of Ola as well as Ather. While they also mentioned that they will going to be starting to export the iQube to the other ASEAN markets. On brokerages, because of the valuation, Citi has a 22% downside from the current levels, coming in at roughly 1,550 rupees. They say that it was an operational beat on the numbers, as well as expecting high healthy demand for the two-wheeler industry in general. They say that the multiple launches in the two-wheeler and three-wheeler planned by the company is a key positive, and this same view was echoed by MK as well, which has a target price of roughly 2,250 rupees per share. Moving on to Hero MotoCorp, we see that the results, as you rightly said, highest ever profitability. Revenue growth was strong at roughly 15% as well, while margins was up 25%, coming in at roughly 14.3%. The company also highlighted that this would have been higher by roughly 130 basis points, but the EV division is currently loss-making, so that's why the overall margins have come in at roughly 14.3%. Brokerages have been very positive on Hero MotoCorp, with Citi target price of roughly 5,500 rupees per share, which is an upside of 20%. Healthy realization as well as margin trends are a key focus area for the company, while premiumization focus, as we know, is going to be key going forward as well. MK has a higher target price of roughly 6,000 rupees per share, which is a 31% upside from the current levels. They've said that the Q4 performance is in line, while management has highlighted for the first time that the first-time buyers in the rural market might finally be back. So overall, a very strong picture on the two-wheeler space. Started with Bajaj, both Hero and TVS today echoing the same. Back to you.
Okay, yes, so absolutely strong numbers. Another percent from here in terms of margins will be extremely strong. And MK has upped their target price along with a couple of other brokerages. MK's earlier target price was 5,100, now at 6,000. So clearly bullish. But let's slip into a very short break. More on the other side, so stay tuned. We'll continue to talk specific stocks, try and get you more perspective.
Presented by Patanjali Kesh Kanti Oil and Shampoo. Tootna mana hai.
Have you been struggling with your personal finances? You're not alone. There are a lot of people out there that find it difficult to manage their money. But on Big Decisions, we'll be discussing a variety of topics that will help you make your financial decisions with confidence. Check it out on any of our social media platforms, the television channel, on the website ndtvprofit.com, or in fact, on any of the podcast platforms out there.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about This is, of course, the volatility, the election trade, volatility on the Nifty. We know that VIX has been high, but this kind of signifies the kind of points that have happened from the first phase of the election thus till now. And you can clearly see the kind of divide that has come about in between a phase of a rapid rise, if you will, and then an equally swift fall. And a swift fall it is because now we are at nearly 2.5% or nearly 3% down for the small cap index, and the Nifty too is now very close. Forget 22,000, it's very close to 21,900 odd, about 30 odd points away from there. So it's actually very swiftly come off as the Nifty, 363 points now. Rajesh, you were rightly saying that this is not a buy on dips market because it's sunk further today. I'm just trying to understand whether or not you take a trade. But what are the levels that you're watching out for on the Nifty per se, or even for the small caps for that matter, which are down 3% now?
So I think, Neeraj, as I mentioned, 21,800 where we see that, Nifty can continue this fall further. So I think another 150 point fall we can see in the continuation of this down move. The way Nifty has broken its 50-day moving average, and there is no as such recovery coming from any of the sector. It's a continuous supply pressure. So market is sensing something else at this moment. And despite of earning, there is no disappointment, major disappointment from the earnings. Also, market is not giving any kind of thumbs up to those earnings also. And stocks are, continuously showing the profit taking. So I think some bit of cautious approach we can say at this juncture from the market participant, and they are taking some profit on table and they are booking the profits. That's why Nifty has now broken decisively below 22,000 level. 21,800 is the level where we are focusing for the Nifty in the continuation of this fall at this moment.
It certainly looked very, very wobbly. And just the point contribution shows how SBI now is the top contributor and to the gainers. But it's, except for that and autos, there isn't quite too much out there in terms of a cheer for the large cap space at all. So bear that in mind. Now, Chakri, today it was not just about results. There was also this whole spate of regulatory moves that are happening. And we know that what RBI has done to some of the NBFCs, but now this comment coming in about even gold loan companies and how the disbursals should be restricted, particularly on the cash side. And while the companies themselves have said that it may not be as big an impact, the market doesn't seem to be liking that.
Indeed, when the sentiment is kind of weak, the way it is right now, any negative news is taken even more negatively. And I think because the RBI's provisions are, actually, if long story short, it'll actually improve the balance sheets and therefore make the company stronger, which would improve the multiples because, the valuation, the margins will improve. But, that's a story for another day. But on a weekday, I think, I think it's best to remain on the sidelines rather than chasing stocks which are already done very well.
Chakri, do you think it's just sentiment, or do you also believe that valuations are looking on the expensive side? In the run-up to maybe both the elections as well as Q4 numbers, were valuations looking on the expensive side, and therefore every piece of slightly difficult news is now met with a adverse reaction, and every positive news not really rewarded in that sense? Is that what is really playing out, or is it sentiment?
I think it's partly sentiment, because if you look at what happened, for example, with Titagar Wagons, Jupiter, there's railway companies, they reported exceptionally strong numbers yesterday and a couple of days ago. And in spite of the stocks having gone up like 5 times, 10 times over the last couple of years, the stocks again went up. And you look at their multiples adjusted for the new order book, etc., the new revenue growth, their multiples are still reasonable. So there are enough pockets within industrials, railways, defense, even infra, and even banks for that matter, where adjusting for the earnings, the stocks are looking reasonable. So there's enough pockets that you can find. But since there's already money made, I think on days like this, it's easier to take money off the table.
And in terms of a trade, Rajesh, with regard to Manappuram Muthoot, should you venture at all in some of these? I know overall you're pretty adverse at this point, but Manappuram Muthoot specifically, and what should one do if one is already holds long positions?
So I think structure for Manappuram is on the weaker side, and the way stock has broken its important support area on a daily as well as on the monthly time frame. That clearly shows that we may see furthermore supply pressure. Looking at the near-term, short-term structure, now stock slipped below to its importance moving averages. I think the next immediate support area for Manappuram is now placed at around 158 to 155 zone. If at all stocks holds those levels, some pullback action we can see from those levels. Though stock is already in oversold trajectory, this is the 6th consecutive day where we are seeing supply pressure is there in the stock prices. So I think around 158 to 159 zone, one can try to buy some contra bet around those levels with very strict stop loss of 155 for just to play a pullback action, because it's a very important and critical support area for the stock in this decline. So I think wait for another 2 to 3% kind of fall in the stock, then again review around 158 zone. For Muthoot Finance, stock is now almost trading near to its important support area of 50-day moving average. So here, yes, structure is on the bullish side. Stock is still holding the previous breakout, which we have witnessed in last couple of weeks. So looking at the overall structure for Muthoot Finance, if it's a hold above 1530, 1535 level, then yes, this stock may attract some buying interest, and then possible upside towards 1640 to 1660 we can see in the near term basis. So Muthoot Finance is looking attractive at this junction on the technical side.
Attractive, at least got something from Rajesh with regard to a positive there. But let me quickly move across. HPCL in focus on the back of numbers, of course. Company came out with a strong quarterly growth in terms of earnings. Company also announced 1:2 bonus. But the stock absolutely languishing in trade. Mihika's here with both HPCL to give us the context, break down the details, as well as BPCL. Mihika, what can one expect?
Yes. For HPCL, now revenue beat estimates. EBITDA did miss estimates by 6%. However, profits were in line, and profits were up 5.3 times compared to the previous quarter. And revenue did see an uptick of 2.6%, which was expected. And margins were expanded 225 basis points. The company also approved a bonus issue, 1 share for every 2 shares held, and a record date for the same is June 21st. In terms of crude throughput, there was a 9.4% sequential uptick at 5.84 million metric tons, and the pipeline throughput was down 3% quarter on quarter to 6.5 million tons. The FY24, the average gross refining margins were down 25% at $9.08 per barrel versus $12.09 per barrel last financial year. However, it is key to know that FY24 did see an overall 9% uptick in Brent crude prices. When we talk about Bharat Petroleum, we we do expect a 1.4% revenue uptick. EBITDA may rise 40% on a quarter-on-quarter basis, and net profit may rise 57%. Nomura has noted that Bharat Petroleum will benefit from the sequential rise in their refining margins. They estimate $15.9 per barrel, and they also expect rise in the marketing margins about to the nominative levels, and they also expect inventory gains on the back of higher crude prices.
Okay, thanks a lot for that, Mika. We'll watch out for BPCL and of course HPCL. It's corrected in line with HPCL as well. Chakri, quick thoughts here before we thank you on the oil marketing companies, and what did you make of HPCL results?
Given the volatility, in oil prices and, whether you will pass through or not, the prices, the margins are always suspect. So I think I'll stay away from HPCL and BPCL.
Okay, thanks, Chakri. Rajesh, your views and also quickly on your BTST ideas, if any.
So HPCL, if I look at the technical structure, stock is now approaching to its important support area on the daily chart, which is placed at around 495, 498 kind of zone. That is coincide with 50-day, 20-day moving average. So that needs to be closely watched for next 1 or 2 trading session. If it holds these levels, some pullback action we can see. On the higher side, 515, 520 is the key resistance area. If it slips below to 495, then I think this supply pressure may extend towards 485 also. At this moment, there is a STBT. UPL is short. Stock has given a breakout of its upsloping trend line. Stock structure is weak. Stock is making a series of lower top, lower bottom formation, and the way stock is going down in last couple of trading session, we expect that further more supply can continue. 450 is the downside target for UPL. Keep your stop loss at around 474. And the second stock is on the again on the sell side, that is Jindal Steel and Power. We see some selling pressure is again attracting in the metal space. Jindal Steel and Power is now negotiating with its 20-day moving average, looking at the supply pressure in most of the metal stocks, and throughout the day we believe that Jindal Steel Power can go down. 905 is the immediate target on the downside, so one can go short with stop loss of 938.
Okay, gentlemen, we'll leave it at that. Thanks so much for taking the time out and being with us, both Chakri as well as Rajesh. Really appreciate your time this afternoon on a tough day, I might add. But as the market's coming up to a close, we can only say that it's been more than a wobble, because this is some serious selling that has happened today. 21960, I'm really keen to note the FI numbers as they come and the turnover as it comes today. So it'll be important to see that. No prizes for guessing that most stocks are in the red. But if you just look at what's happened to the Nifty intraday, I mean, just the fact that we are closing at the lowest point of the day doesn't augur all that well. Right here, look at that. This is the lowest point of the day, and we are ending here. And multiple stocks, HDFC Bank, Reliance Industries, have contributed to this and not made the picture look very pretty. But yes, the top losers are LLT and Asian Paints. But if you look at, I think Reliance down about 2 percentage points, and HDFC Bank about 2 percentage points as well. They would be amongst the top contributors, if not the top 4, but certainly amongst the top contributors. The fact that L&T has fallen 5.5 really makes it the biggest contributor to the losing cause. But like I said, it's not just the large caps. As 10 seconds left, the mid caps too have had a wobble, and Harsh will take us through that. But just pull up the BSE 500 picture nevertheless while Harsh comes in, and the top losers and gainers will come up on your screen, and that will give you a sense of how bad the picture has been.
Well, yes, earnings heavy, Neeraj. Look at an SKF, look at a Godfrey Phillips. Tata Investment also up roughly 5% odd. Paytm is one which stood out because last 2 trading sessions it's been on lower circuit, 5% lower. It hit its 52-week low earlier today morning, and it's up 5%. So interesting to see what will happen to that one tomorrow. But some of the other earnings candidates, look at a Piramal Enterprises down 9% plus. Of course, some on the back of specific action like a Mannapuram. Also down roughly 7.5 odd%. But it's been a tough day in general for the broader markets more than the benchmarks.
Yeah, and the capital market plays come into...
Yes, Motilal Oswal and the like, even an Angel one, probably the within the top 10. Even the PSU plays actually, Neeraj, now that you pointed out. Let's pull up something like an NMDC, an NHPC.